So main topic for today is going to be stock selection, more specifically what I look to avoid when looking to place a stock trade. Because obviously we can't just trade everything that we see, right? Well, we'd have way too many trades. We would go kind of crazy. We would probably lose all of our money. And there is a very few specific things, not in any particular order, not ranked by any relevance or strength or significance, but just overall things that I want to avoid when thinking about placing a stock trade. So we had a few stocks, like there was one stock today that had a high of $6 per share and it dropped down to a low of 85 cents. Yeah, we want to avoid that stock. And so we're going to use examples like that and try to kind of just break down what to avoid and how to overall just plan our trades. All right, so let's jump into it with some examples. So first and foremost, the most important thing that you should figure out and really kind of integrate into your trading strategy or just approach is understanding exactly what the risk reward ratio is with your strategy. And most people think about risk reward as just that number in specific, but not how it ties into your win rate, right? So newsflash, you don't need to have a high win rate to be profitable if your risk reward is high enough. So here's a very simple chart that explains this concept. You can see that red means that you're not profitable, green means that you are profitable, and then yellow means you're break even. We're not going to talk about break even. But you can see, for example, if you have a 1-to-1 risk reward, so you're risking, say, $1 to make $1, you need to have at least a 60% win rate to be profitable, technically 51, but they round up. You can see that if you have a very high risk reward ratio of say 1-to-9, so you're risking $1 to make $9, for example, you could have as low as a 20% win rate and still be profitable. So obviously risk reward is a very important thing. I have a whole video listed. I'll have it in the card you can press up here. I don't know where it is. It's a very important concept, and we actually have a tool in TradeBuddy that is purely formulated around this and helps you plan your trades using risk reward. So you need to figure out how to establish that. Now, if you want a live example of what I mean about planning out your risk reward, with my strategy, overall, we like to use previous resistance as new support. So first thing we're going to do on this chart STAI is just mark off our previous resistance. We can see that there's a level here near 264. Next support lower is down at 180s. So if we were to plan to trade this breakout and retest of 265, meaning it's going to pull back down and we're going to go long, what we would say is that, okay, we're going to buy that previous resistance as new support at 265. Our max loss, so the most we're going to risk, is down to 181. And then our first target is next resistance higher, and that's at $4. Is that a positive risk reward? Now, well, you can do this manually. You can say, okay, well, you're risking about 90 cents to make about $1.36. That sounds over one. I don't know exactly what it is. I have to break out the calculator. Or what we can use is just this fancy tool we have at TradeBuddy. And so what's really cool about the trade planner is that it tells you exactly how many shares you can risk based on your account size, assuming that you're willing to risk 4% of your account per trade. And you can adjust this to as low as 1%, as high as 6%. I like to use 4%. So this means that on a $5,000 account, I can risk $200. And then with the entry price of 265 and a risk level of 1.8 and our first target of $4, we can see that our R value is exactly 1.59, which is pretty good. I like to have at least high 1.5, if not over 2, is best. Tells us that we can use 235 shares. And then at the first target, we sell 148 shares. This will ensure that at that first target, we make $200, we make back our 4%, and then we have left over in case. And also has some nice profit targets too, based off R value. So as you can see, with how I trade, R value is super, super important. So this trade here is, if nothing else, has a good risk reward, so you can consider planning it further. Now, what about this trade here though? If we want to go long off the breakout and retest of $4, and then we say that our next support lower for max loss is down at 280s, next resistance is up near 4.9. Is this a good risk reward? I mean, you can already kind of see visually it's not, right? You can just kind of tell the range from entry to lows is bigger than entry to top. So right away, I mean, sure, it is previous resistance as new support, but just off of the risk doesn't really make sense. And we can confirm this with the trade planner, right? If we go in here and we say, okay, we want to go long off of $4, our max loss is 280s and our first target is 40s. So yeah, that is not a profitable risk reward ratio. We do not want to take that trade. So another big thing that we want to avoid when looking at and considering trading, especially small cap stocks near market open, is you want to avoid the idea of buying stocks that are just spiking into market open. So one thing that I always say is that you really want to just kind of sit back in your chair almost and just like zoom out, right? Zoom the chart out as far as you can and just ask yourself, is this just one spike or is there a trend on the bigger picture? One thing you can do is look at different timeframes like the daily chart, the hourly chart, just to get that sense. But here's an example of a stock that I just felt like this morning was not really relevant to me. I mean, there is a lot of different reasons we can see now that this dropped really far. And so the main reasons why I wasn't that interested is a few things. Just like, number one, this stock really has no catalyst. There is no relevant news for this stock today. There was no earnings, there was no contract news, there was nothing. So right off the bat, while it's not a requirement, I really like to see when stocks have some catalyst. Number two is that you always want to ask yourself, are there bag holders on this chart? Or just ask yourself the question, does the daily chart seem like it can actually go for a big run? Main things to look for here are there very obvious previous levels of support holding as new resistance? Has this stock shown signs of a spike in the past? Is there too much resistance overhead for it to break out, right? Things like that are what you want to look for. And when I look at the chart for WOK, you can see number one, this is more of a recent IPO. It looks like it started trading back in, August of last year. And it has very strong resistance. It hasn't broken out yet over 760s. And then recently, we've actually broken down. So, and we're actually below, previous support, right? There was support back here when it first started out. Then here it tried bouncing. And then we had this big crack down. Right away, I get the sense that, well, that feels like a downtrend. It's probably going to bounce up and reject that previous support as new resistance. So I don't really like it that much. We look at some other timeframes like the 20-day hourly chart. Obviously, if we take away the massive dump it had, if we look at it like it looked at, this morning, even a bit more. Does this really feel like a strong uptrend or just one spike? And what I mean about uptrend is that you want to kind of see, previous resistance test as new support, right? You want to see a trend forming. This just feels like one spike up, right? It's just that first piece. So if anything, the only way I could trade this is wait for it to pull back and then break out further, because then I can, plan to use that previous resistance as new support. I have a max loss level, all those things. And so because of that, sure, it was a breakout over pre-market high, but there was no catalyst. It feels like it's just rejecting on the bigger picture. And if nothing else, if you did look at this stock and say, well, Tony has said before to use pre-market high as new support, hopefully you had the trade planner to calculate your risk and make sure that you're not risking too much of your account. Let's say, for example, you did take this trade. You would go long at 526. I would probably say if you're trading off the 5-minute chart, your max loss, next support lower, would be down here at 440s, right? That's previous resistance, that's support. And then you can probably already tell this isn't a profitable risk reward anyways. Maybe if you, for whatever reason, fudged the numbers and chose to use 470, even that is pretty much 1-to-1, I would assume. Let's look at the trade planner. Go long at 526, our max loss is 471, first target 581. It's exactly 1R. And so with all the other context with this stock, the fact that it has no news, the fact that there's no real trend going on, the fact that the daily chart blows, it's not really worth taking. It's not an A+ setup. You really want to focus on just trading A+ setups. So most importantly, for all of this to really make sense, you have to have this idea in your head of what an ideal A+ setup looks like. For me, that's going to be a first green day stock with news where the pre-market high is respecting some significant daily chart level. After market open, it shows us a rejection, showing us that there are shorts trapped there. And then later it breaks out and we can get in on that retest. That is my A+ setup. I know that. So it's very easy for me to identify, okay, that doesn't fit. I don't want to trade it. If you don't have that confidence with what your setup is, this isn't going to really help you. So if you need help on getting that confidence of a good setup, click the link down below to join TradeBuddy. There's a free 14-day trial. I'll explain to you exactly what my setup is and how to trade it. So ultimately, the way that I avoid and have my stock selection is because I know what my strategy is. I have 1 or 2 setups that I like to trade, and I have built up the discipline and the kind of rule set to avoid everything else. So if you enjoyed that video, give me a thumbs up. If you want to be notified of future videos, hit the subscribe, and I think you got to press the bell too. I'm not sure. Anyways, if you have any questions, leave them down below, and I'll see you in the next one.